So we're back. So, contextually, we've got a couple minutes here. Just to give you an idea from market profile perspective. Let me turn. This is a daily chart of the E-minis, and I think I've showed you this last week, and this is kind of what this blue box, rectangular box, is kind of give you an idea of where kind of the distribution is. When I'm talking about distribution, it doesn't necessarily mean a high volume area. It means a distribution. Distributions are pretty much divided by the low volume areas. And as you can see, it, kind of held in here a little bit. Demand showed up here. Demand showed up here. So it's pretty clear where demand is. And we were at this point, supply was here pushing prices down, or at least putting a little bit of a cap. We blew up above this a couple of weeks ago, and we've been just kind of hanging in there, really not selling off. The only concern is if you make a distribution, and I'll redo this just for context. If you make a distribution from the lows of from this rally to present day, you have, and for those for the volume profile guys, it's called a P formation. We've not necessarily single prints, but we've got, again, this is a day chart. And what we have here is, prices were in balance, right? We're here and really shot up. I think there's a little bit of a gap here on the S&Ps, but we had a gap and we pulled back, and this area started to find some demand. And this is very typical. Like I said, there's P and B formations, and the narrative of this is an imbalanced price movement. And in this case, kind of went sideways for a little while and pulled back, identifying demand. These are great formations and waiting for signals of reassessing itself and at least testing the highs. But contextually, we've got this area of here on the longer term that I want to see hold. If we break this, there's looking at a formation of prices were rejected here. We may have to change a little bit of what we're talking about. So if we get some lows, and this is kind of what I'm looking at, if we get any kind of lows, especially if there's a lot of energy in there, prices may start rotating back down. So those are the two kind of scenarios that I'm looking at right now. More apt that this will hold and we get another push higher. But that's contextually what I'm looking at right now. And if anybody has any questions about market profile along the way, please feel free, interpret any other charts that you want. But this is what I'm looking at again right now, is this high volume area represents this area here. So that's what I'm looking at. Will this area hold? If it does get back into here, and you could probably do this. Let me make this a 30-minute chart. Just give you a little different view of this. We have a little bit of, let me put the sessions up. Again, this is that area. If, again, getting back into this rectangular box here, let me extend that out. We start trading back in here, we've got some issues. But this is the area that I'm looking at. We could pretty much put a little balance area in here. where you've got a very mature, I shouldn't say real, but this is by definition, a balance area where you get the extremes on both ends with the high in the middle. So watch this. This will be, if we do pull back, you've got this area that I'm going to be watching. It correlates with this high volume area in here at the 76.88 level. So watch, if we get in here, this will be the real test. Like I said, the 76.88 area. So let's keep an eye on that. Again, we're still here. Everything, I should say everything looks bullish, but let me clean this up a little bit. It does look more bullish. You've got near-term trend higher. You got long-term trend higher. So, and for anybody new, just for explaining, this red area in the profile is the value area. The gray area up here is outside the value area. And again, 68% for those who really learning about it is 68% for standard deviation for value area. So prices right now are trading in there. Let's watch the open. Let's see what else is NVIDIA opening up. Against towards the highs. I think this NVIDIA closed at what, 209 and change. Let's say 210, just to make this simple. So we're up about 14 points. %70 increase in revenues. Pretty strong numbers. It's funny because as soon as they announced, prices were pulled down to the 203 level. So it went down a little bit before the CEO Jensen started to talk, pushing prices higher. So it was pretty much in the conference call that really pushed prices higher. I think the overnight lows, if I got this right, anybody could correct me, please. Take this off, but we're at the 77.07 is the low, so we're pretty much there. Watch how it reacts. Overnight lows and highs sometimes act as support and resistance. This time I don't know how. There's a profile trader by the name of Jim Dalton, one of the originals. Anybody, I encourage you to look at his YouTube channel. Very educational, but Jim has been doing it probably a few people longer than I have. But he's got a term, and I get these confused, either a weak low or a weak high, or poor high or poor or weak high. But anyway, is basically when you get a significant, I shouldn't say significant, but a level of overnight highs and lows, and they're held within a few ticks. It represents weakness in this case because it's retail. Institutions don't look at those numbers, and there really is a logic to it. I do appreciate the narrative of it, and I've watched it happen many times. So it's a good especially for day traders, is be aware of that. Is, when you get prices that precise, and it goes pretty much for everything. I think he uses halfback also. It's a reference that the retail traders use. And his theory is retail traders are going to be weak hands versus institutions. And I don't think anybody's going to really argue that. But it looks like it's kind of dancing around here. No surprise, the NASDAQ, even the NASDAQ's pulling back. It's NVIDIA. Yeah, just hanging in there. It's really not doing much. You take a look at NVIDIA, it's got, it's up 6% today, 12 points, almost 13 points. Great numbers, but from a technical standpoint, really not getting much. I mean, we're pretty much sideways. You've got this distribution higher here. But also and this is an example of what a lot of people I see on the internet really don't understand, the essence of volume profile. They see high volume area, low volume area, point of control, and they think they can trade off of that, but they miss what Pete taught of racing time, of seeing or visualizing the natural distributions. And the only way to do that is break the markets down by their natural distribution. And again, I think this is a good example. If you've got a distribution going higher, obviously it's very directional. You could possibly break it down this way, or as I had mentioned, the P's and B's. You could look at NVIDIA this way, which is probably the most accurate way. And this just validates is we're in balance. Now we've got a pretty big balance or distribution of 228, and I'm just rounding it to 192. So that's that's a pretty big spread. You can make some money. It's not that this is not tradable, but you're seeing supply, you're seeing demand, We're seeing supply up again here. We try to, at this point, we're going higher, but it didn't have enough to get past there. Now, I want to point something out, and this is more profile chart reading than looking at it in video. Is you've got a point of control here, and you kind of watch these, is when they act as support and resistance. Many times, I don't have any empirical evidence. I've never run the numbers, but when the point of control acts as support and resistance, in this case, instead of prices going all the way down because you're expecting those, supply, demand, is watch these. They sometimes act as support and resistance and a key to possibly breaking out. Not always, but again, that's just one way of reading the markets, of, you know, being stronger or weaker than the initial look. Again, watching this, it's, you know, kind of pulling back a little bit. The E-mini's just hanging in there, dancing around the lows. So I don't think that, I think they're proving that the lows of the market, overnight lows, really aren't significant today. Do this to regular, and just to give you a little bit better idea. So, you know, we've got this rally off the lows. It looks like, you know, demand seems to be, as I mentioned earlier, still seems to be in charge. On the upside, I talked about this at length last week. And for those who missed it, when you have, this is, again, I use, a lot of times I'll use regular sessions because that's the vast majority of the volume. But when you have a profile that is very prominent, a point of control, and it's easy to say, this is another one. Let me move this down just to show you. When you get this acts as support and resistance, and short term. Let me just put that short term. That becomes support and resistance. We're kind of running up to that. It seemed like it held, but I'm probably more interested in here, acting as, in this case, resistance, the 77.37 level. That's what I would be concerned as for the first area of resistance. But, you know, drifting up, testing that, the Dow turned around, and Dow was down. Let's take a look at a couple other markets. First of all, let's go back to NVIDIA. Is that pushing this? Yeah, NVIDIA is at the highs. NASDAQ in the middle of the range. And I put this, let me take this part out. I put a profile. This is for the NASDAQ. And here's my point is, if I take these out, we had a very defined balance for 2 days. And when you put a profile, you make one distribution, you know, identify the distribution. That point of control, surprisingly, is the high today. That is your first area of resistance. That's a good example of what I was talking about, is by identifying a very prominent balance area. And in this case, it took 2 days. You know, if you take this down and just put, you know, you kind of have overlapping values over these 2 days, maybe a little bit lower. But when you put these together, this is the good stuff with market profile that a lot of people don't understand. The purpose of this is identifying this distribution. And again, the market, like, what would be here looking at a traditional bar chart that would make you think that this would cause some resistance? Most people would, and again, and just looking at a 30-minute bar chart, you know, start putting areas up here. But what would make it stop here? And again, short term, this is for day traders. And here it is. As you can see, that was there before so this was done from, I think it was it last week we were looking at that? Or Tuesday, I'm sorry. Monday, Tuesday, earlier this week. Or no, that was last week. So, watch that, see if that holds, how relevant the market thinks that area is. E-minis still hanging up at the tops. If it pushes again, the 77.37, guys make a note. Because some other markets. Gold, not surprisingly, is down. Gold's had a really nice push off the lows. And again, for if there's any swing traders or longer term traders in here, and I think we talked about it again last week, is I was watching gold, break out. There's a fairly good chance prices got back into this value area that was created going back to March. And you can see the value area in here into this distribution. In this case, it seemed to overlap the value and the distribution. But, you kind of see that. It really wouldn't surprise me if I come kind of pushing towards the 5,000. What is it, the 49.67 level? Crude, kind of the same thing in the fact that we've got this distribution. Let me extend it out. Crude is just, we've got really not a lot of change from last week. I mean, price is a little bit lower, but it's at 96.30. And, structurally, this really hasn't changed that much. With the Russell. Switch. This is a daily chart, but the Russell pretty much same thing. Just really, there's not a lot of movement in this. This kind of did a little pullback, and I referred to that P formation, and you can see it comes back down. We're starting to put the lower end. Here's where demand is starting to come back into the market. These are almost work like, as everybody knows, pullbacks is, prices rallied, pull back, they find demand. Will they push back to the test the highs, the 3,072 level? I would, on this trade, I need some momentum to get me into this that says, validates that you're in, and look for a little bit of a push above here. It seems to be the high. We get a break above there. There's a pretty good chance we'll at least go to the top of this distribution. And again, we're probably looking at somewhere around a 3,064 level. But that's, making a few assumptions along the way. I do mentoring of traders, and I kind of got into a discussion of managing a trade versus having a target. And anybody has, jump in if anybody has an opinion on this, but having a target when you, I kind of get the idea, when you're entering the trade, and let's say on the long side, an example like this, let's say you're looking at 3,020, just to make a round number, to go long with, I think it's going to go up to 3,060. So you got 40 points. There's my target. I think prices are going to go rotate back higher. How patient should you be with that? You should be very disciplined in your stop. And to me, my stop is where I'm wrong, and I work that backwards. Let's say, for example, 29.93. So I've got, X amount on the downside. So that's 27 points on the downside for 40 points on the upside. How disciplined, let's assume I get in, how disciplined should I be on the long side? Or should I just manage the trade along the way? The argument is, you should be disciplined. Prices should go where you're anticipating, but I kind of manage the trades. And there's that point that is between, let's say this area to here. Here's your target. Once you're in that area, how should you be peeling off as markets go higher? Should you manage it 100%? I'm long at 3,020. Should I get out if things start looking ugly or it's not acting the way I want? The cadence in the trade is slowing down. Is it 100%? That is a lot of that's a lot of personal trading style, and that's as a trader, that's your trading style has to be organic. I preach that and preach that and preach that. It has to be your style. It has to be what you want, what your risk parameters are. That's what makes it yours. I don't know if there's a right or wrong answer to any of this, but it's got to fit within, like I said, your risk tolerance, how you want to trade. You could make an argument that it's 100%, or I'm going to peel off 50% halfway up, or if I get 80% of the trade of my target, I'm out. There's a bunch of different theories. Make it yours. Again, especially if you're somewhat of a neophyte or just learning this, make your trading style yours. Don't make it mine. Don't make it anybody's other than yours. Try to learn as much as you could at first and kind of get a larger net and start making it smaller and smaller to the strategy that fits you. I've been doing micro profiles since 1988. And I did that, and I actually, tried other things also along the way. But I always came back to, volume price analysis. I never had, I'm not, please don't take offense to it, anybody. I don't use indicators. It's just not, they just don't make sense to me. But, I've never consistently made money. Doesn't mean that you don't, you may use it for confirmation. That's up to you. But, the fact of the matter is you got to make it yours. And that's what I would suggest more than anything. And again, I'm talking to the traders who are, putting their feet in the water right now, or just learning this. Make it your style. But, as far as that goes, as I ramble on about that, go back to the E-minis. Again, daily chart, just kind of, the value area relationship, I preach that. And, we're just kind of hanging out here. In fact, you could put I talked about P's and B's. Here's kind of the B segment. We had a pullback. So we've got supply up here. Good and bad about basically our business. There's always conflicting information. Always. But how you interpret it, what you feel is more, what carries more weight. Longer term, the market's looking higher, but we've had a little bit of a pullback. This area became a little bit of area of supply. Confirmed it today. I'd like to see a break above this to confirm that we're going to go higher. But at this point, it's just kind of resting in there. What are yields doing today? Yeah, the 10-year still kind of hanging in there. This is yields on the 10-year. And when was it last? Was it last Wednesday? Bessa came out. So we're, yields aren't telling. Then again, for traders, if you trade the E-minis and that's all you do, this is probably irrelevant to you. But you've got, this is the yields. Never mind. You can obviously see yields aren't telling us anything. Bonds really haven't given us much information. We've been here, same place in January of last year. So we're kind of sideways in yields, not doing much. But, yesterday everybody was looking, I don't know if for people who watch CNBC or Bloomberg or whatever, everything was NVIDIA, how they're going to do it. Well, guess what? The thing about our position, our job, our industry is what's next? Okay, NVIDIA's gone. What's next? Well, tomorrow everybody's going to be on hold right now because, everybody's going to want to see what Fed President Walsh is going to say tomorrow. Is going to say tomorrow. Is it going to give him more color? So that's kind of what interest rates are looking at today. We're going to go sideways. Had a little bit of a sell-off yesterday, or I'm sorry, on Tuesday, but really nothing, no color from the bond market. The dollar continues. I had a little bit of a bounce this week. I don't know if it's up, but if Trey on Trade Talks on Sunday evening did a really nice job setting this up on the theme of a weak dollar, and I thought he did a really good job. And anybody didn't hear, I think it's on YouTube. Look at last Sunday's Trade Talks. And again, I thought Trey just did a really nice job, not only pointing it out, but his presentation. And NVIDIA just hanging in there. The other one that was in the news yesterday, which is really doing well today, up 18%, was Salesforce. They came out with earnings also, but they're kind of changing a little bit more. They did a nice breakout. Structurally, this had more of an impact to me than NVIDIA does. In fact, hold on one second. Let's go to. Let's go. Let's look at some of the other software. Because software was, several months ago, software was going to zero. I mean, Salesforce went roughly from 360 down to 147. That's significant. Starting to come back. Adobe was another one. This is a software company because NVIDIA was going to put them all out of business. We're starting to get a bid in Adobe. Adobe's coming out September 10th. So next week, Adobe's coming out with earnings. ServiceNow, they came out and they've done good, but take some of this out. So you've got these guys are catching a bid now. So maybe the software play. It looks like the software play has that they're all going out of business. That play is off the table. Oracle's having a hard time. It's funny. I remember on this day in last September, that was last year, is when they had this gap. It was transforming everything. It was different country, different company, and it did nothing but sell off since then. But you found some demand in here. Same thing in here. You see demand pushing higher. A break above this, somewhat on a structural basis. We're going to go higher. Mongo's done good. MongoDB that did not sell off nearly as much, or did Snowflake. So these did a little bit different, but the CRMs, the Salesforce and Adobe's, they really got hit. So like I said, maybe that's changing. Maybe the script has changed and they're not going out. But like Salesforce, it's, again, relate this to, you've got a distribution down and it kind of goes sideways for a while. This is not just for Salesforce, but this is just market profile. You've got, and this helps for setups on everything else. Now you're into this distribution here, right? So do we rotate higher? If we could stay in here, prices are going to be accepted. They're going to rotate higher, and just to see, because that's what prices do. Prices there's a couple things prices do. Number one, they're either balanced or they're exploring, right? And that's all they're doing. They're balanced in a value area, or they're exploring, pushing either higher or lower to find the next value area. Sometimes prices are rejected and they go back into value, which are good trades and all. But that's kind of one of the things that Profile that I really like about Profile. Profile is a tool. That's all this is. Profile is nothing more than a tool. Helps you organize the data into their natural distributions. That's all this does. Excuse me. How they work in that. That's where the trading comes in. The subjectivity. That's the good part of this, is watching how prices were in value, move out of value. So prices were here. They went and explored and they started finding value in here. Now we went back up into this. And again, this is Salesforce. But watch the price value in here. Wait for a rotation. It may get them back up into this area for a possible small time short. But if prices are rejected, maybe they come back down into this area, the 200, roughly the 200 area. So again, watch how, that's what it's doing. And that's what markets are trying to do right now. Let me take these out. Maybe this clears it up a little bit. You've got this balance area. And again, prices that pull back into it. Watch how the reaction. It's not that what they do, it's how prices react. NVIDIA numbers, it's, most traders probably don't know what the actual numbers were and how good they were. But, traders, our job is not to really know the numbers as much as what the reaction is to the numbers. I've doing this for 30 some odd years. I've seen great earnings, great forecasts, great revenue, and prices go down, and vice versa. So that's how we make our money. Is watching the reaction, how prices are reacting to it. One of the other things is, I told you that either prices are balanced or they're exploring for new value. You also want to take a look when you're looking at charts. You also want to take a look at what's the market's trying to do. What are they trying to push? You go back to like the E-minis. Again, day chart. It's, let's take all this off here. What's it trying to do? If you take a look at this chart, you kind of want to, what are prices trying to do? You push the narrative of prices have pushed higher. Off the lows of the 73.40 area, prices have pushed higher and kind of went sideways. Went back into, so we pull back in. We're starting to see from this pullback that volume is increased a little bit. It's kind of tough because of the time of year. Seasonality is kind of tough with this. But prices have pulled back. It looks like, demand stopped this and trying to push higher. You have to, and if anybody listens to David Dubay, and David does as good a job as any, is talking through the trades and making the narrative of what price action is doing. That works on a couple levels. One of them is, especially, one of the problems of our industry, it's somewhat isolating. But if you could sit here and talk and find out, okay, prices are moving higher, it helps you organize your thoughts. I'm looking at this, prices have pulled back. It looks like demand is starting to push prices higher. The value area from yesterday is a little bit higher because we've been overlapping, right? We have the pullback, overlapping volume, somewhat overlapping volume, overlapping. Now this is the first day, as of right now, that prices look like the value area is above. And I think everybody can see that. I'll go to a 30-minute, may help a little bit. So again, yesterday, and this is the regular session, I mentioned it. Thanks, Danny. But again, the value area here, relationship-wise, is higher. Does it hold? Because this is what we're trying to do right now. What's the market? And that's the point of this is, what's the market trying to do? The market is trying to rally. You've got, if prices hold in here, it's positive, it's bullish, right? Because this is our, prices pull back, demand is kind of met and pushing prices higher. If they fail and prices start going lower, that's huge for traders. That's huge for me. Is, what are they trying to do, and are they being successful? Right now they are, to me. So you kind of keep that narrative going in your head. Watch the volume profiles, how they react. Like I said, we've got what seems to have held, um, but watch again that 77. What I say, 77.35 area. That's going to be the first serious area of resistance to me. And I think you've got, if I'm not mistaken, in the daily, you've got a little gap above. Or was I wrong? No, I think I'm wrong. Okay. I thought there was a gap here. Watch, let the distributions, the natural distributions, when they start playing out, it's such a huge area, a huge way to place your trades. Not that I ever trade them, but Dow looks like it's having a little bit more harder time. Again, I never trade the Dow, but just kind of looking at it is, it's pulling back a little bit. It's having a harder time than the S&P, but the S&P, which we haven't really looked at, is another one I look at. This is an ETF on the equally balanced sectors. When you look at the SPY, it's broken down, and there's weighting based off of the market capitalization of companies. It's heavily weighted. It's heavily weighted towards tech. So you kind of take a look. You look at this, and you can see tech is. This is the Qs, the Nasdaq, and you take a look at, and it's clearly higher. This is all NVIDIA, right? You could see that we're up almost 1%, where the more balanced S&P is actually lower than yesterday, really not moving a lot. So it obviously confirms, and I'm going to show you XLK. It's up 2%. XLK is the sector, State Street's technology sector. It's up 2%. Discretionary is down, financials are down, energy is down, industrials are down, healthcare is down, staples are down, materials are down, communications are down, utilities are down. So everything is down. 1, 2, 3, 10 of the 11 sectors are down. Even for day traders, you guys got to know, you got to watch this stuff. This validates a move. How strong is this going to be? Now, it can remain strong and push higher, primarily because of NVIDIA. But when you get 10 of them down, in fact, the SMH is up very big. When you get 10 of the sectors down and only tech higher, it's kind of tough. You just be a little, I'd say, a little cautious. This is the conflicting information I talked about. I guess you could do that. Delphine, that is a good question. What's the difference between a weak low and a poor low? Honestly, I don't know. It's been a while since I've had conversations with Jim, but the whole purpose is once a level has been touched or within a couple ticks and reversed? Or is it the same? I don't know. I think they're kind of the same. I should probably know that. But Jim is a little bit more of a day trader than I am. That's why he knows. I should probably be a little bit. I should know this. But if there is a level that is, that it goes to and stops, maybe a swing higher, whatever this level is, let's say 187.50. Say prices go up to 187.49 and reverse. That is what he feels is a weak high. And again, if it goes to within a few ticks, especially in the futures market, if it goes within a few ticks and reverses or respects like halfbacks, night session highs and lows, previous day session highs and lows, these are levels that retail people that we look at. Institutions don't look at those levels. Warren Buffett buying, Apple stock, he's not saying, geez, what's the swing highs and lows? He's giving an order and saying, hey, here's an area that I'll buy. And that's kind of what that is. So without rambling that way, it's a preset level that retail traders watch, that they trade off of. Like I said, halfbacks are a good one that he uses. And that works for each period, if I'm not mistaken. So again, these are, let me go to the E-minis. So for example, if prices even go to the high and stop, if prices go to this and pull back and never touch it again, that is obviously either a poor high or weak high, whatever, Delphine. And again, the whole principle, I don't know if I'm answering it. Hopefully I am. Hopefully if it just goes within a couple ticks and pulls back, that means it's retail selling. It's not institutional selling, which means it's pretty much strong. And kind of was looking at one the other day. Was it last week? That almost everything looked like it was retail buying. It could have been a couple weeks ago. That it just looked like all the buying happened weak. There really wasn't a lot of follow through and a lot of volume, and it's pretty much the same thing right now. I mean, we're doing okay. Like I said, Delphine, I'm sorry. I hope I somewhat answered the question. But just going off of this, I mean, it's just taking a look at the NASDAQ. It's at the highs, and I'm pretty much guaranteed that NVIDIA's, without even looking, is pretty much at the highs too. And there they are, hitting new highs. We're at that, we're at these swing highs. Will prices, what are these, where they start finding supply pushing 27. So we're pretty much there, roughly 27, 26 and change. How it reacts here, as much of NVIDIA's up how much today? Up almost 8%. It's a big move. Watch this. There's a pretty good chance that this holds. In fact, watch is if we could do this. Let me take this off real quick. You have, these days are pretty much overlapping, right? put a profile on there. This would be interesting to me is, does this area hold? This became this high volume area of these 3 overlapping days. Yeah, pretty much same. It's not doing much. Is, you know, this is where you kind of look at it as prices were going higher. You got low volume up here, and prices always change. For years, I always thought, I was kind of like, listen, high volume changes price direction. No, low volume changes price direction. Prices go higher, and you see the low volume is buyers stop, and then supply comes in. I want to see how this reacts, right? So, prices started to slow down, and supply hit it, and that's what started pushing prices down. I want to watch this. Let's put this back up. I don't know if these are single prints. Yeah, pretty much, I'm guessing. Is, this is your value area today. How this reacts, and again, this is that vertical line that I put in as the point of control from those 2 balance. Let's see how it reacts. Many times, like I said, I use these all the time just to get an idea how markets are going to react to those levels. Right now, they're just kind of backing off, but I'd be more, obviously you have to be more of a buyer down at the 224 level if it gets down there. But watch that. And again, the same thing is, our prices, what are they trying to do? They're trying to get up here. Probably because of the amount they've traveled, there's a pretty good chance that this is going to hold. There's a pretty good chance that's going to hold. But let's see, because of one thing, if nothing else, over 35 years or roughly 35 years of trading, market's going to do what the market's going to do. They want a breakthrough of resistance line, and guess what they're going to do? They're going to break through it. So, all the work that we do, I put a lot of work in pre-market, aftermarket to get my levels. The fact of the matter is, it's going to do what it's going to do. We do our analysis, and sometimes we're right, sometimes we're wrong. But I'm a big disciple of Stanley Druckenmiller, and his term is what he was taught by George Soros is it's how much you're going to make if you're right versus how much you're going to lose if you're wrong. And that has to come into the calculus of what you're trading. So that line seems to cause a little bit of resistance. And again, this is that point of control we made off of this area in here. And again, here's a level that if you're just kind of looking at this bar chart, you're not saying anything. You're kind of looking for resistance here. What would make it stop? And kind of drifting a little bit higher. Again, really, for me, it's kind of tougher trading in the balance areas. Trade is usually And again, this is a very general conversation, a very general comment. It's more for day trading, is that when trade is in balance or in a value area, it's usually slower. It's kind of, prices get in balance and they find an area and they say, okay, this is going to be balanced for the rest of the day. It happens all the time. Going back to 30-minute chart, of you get, prices move. This is a good example. Prices open up and immediately fall. And then the rest of the day, it does nothing but chop back and forth. We've been, anybody that's traded for any length of time realizes that you get the initial thrust one way or another, and then it just goes sideways. Here's another one. So it's very important to find the personality of the market when you're trading. Today it's higher, right? This is another thing that we talk about, when I mentor traders, is we all want, the big push higher. But sometimes, people's risk reward is a little bit different. I know a lot of people that they'll hold off on the first hour or so, just waiting for the market to set up, waiting for the personality of the market to set up. Is okay, we're higher. I'm looking to buy anytime the market pulls back. That's you're not going to get the big oomph that, I'm going to, if it breaks yesterday's high, you get all that, but you're getting more trades, but more losses. The wins are probably bigger, but you're getting more losses. And again, that's a personality trait of you as a trader more than anything else. So, again, watching this, again, just kind of hanging in there. Let's make this a 5-minute chart. Yeah, that 224 level seems to, here's where the demand is showing up. It's something you get off bar charts too, but you kind of look at the profiles. And this is, if you really go back, first standard, second standard, first standard, second, and third standard deviations. But here it is. As you pull back, again, just going back and forth, do we get the break? And if we get a break higher, our price is rejected up there. Pretty much the same thing with the E-minis, right? We've got it's a little bit different. This is a little bit more of a 3-1-3 distribution today. Again, this is switch to 5-minute chart. Then it gives you a little bit different view, at the highs. Our price is going to continue to go higher. Are they going to be accepted above this, the initial range? A lot of traders look at the 1 hour, right? So we're getting up there right now. There's a break of the 1 hour range. And it's kind of early, but once this, I look at more distributions than anything, which brings us a little bit more to this trade and here. right? And I'm looking at this low volume area and this low volume area versus, and again, I see this kind of a pet peeve with me with the internet or social media where they're, plays on the value area. Look at the distributions. Again, if it gets in here, this is, like I said, this is early, but if it starts rotating back down into here, I reference this way too much, but there's kind of someone put out years ago that if prices open outside the previous day's value area and then go into value, they will 80% chance they go to the other extreme. It's false. And I have not seen any numbers that come close to it. I've run some. The data set is not enough to validate or invalidate it, but I'm getting numbers that are much less than that. I'm getting high 77% go to the point of control and about 68% that it goes to the other extreme. So, again, that's my 2 cents. But what that's saying is, prices are up here. Now they're going to go back into value, expect it to go back to the lower end. And it just doesn't happen all the time. But I'm watching to see if prices are accepted or rejected up here. Again, the distribution is a little bit more of this versus the value area. A little pullback, so it seems to be somewhat holding. I'm looking for this area. Let's make this here. 77.19, 77.12, guessing. This area is probably going to be a little bit more to me. Watching this, the prices are rejected up here, and I should probably make this a little bit higher. You start going back into this level, prices are kind of rejected, and we may have just a range bound market today. But these are things you want to know. Are we going to be range bound? Is it going to be a balanced day? And you adjust your trades accordingly. Every once in a while, the personality changes, but knowing the personality of the market, or, is it going to be range bound? Is it going to be a day that it's, the more of a, 2-1-3 or a 3-2-1 game? This all should be part of, again, your calculus on how you're trying to figure out the market. Again, to me, I put a lot of weight into the relationship of the value areas, and it's very difficult. Every once in a while, you'll see, let me pull, where it changes, which becomes significant days, but see how far back I have to go for an example. Maybe here, where prices looks like it was rotating lower. Here's the point of control and the value area from the previous day. And then it had a late afternoon rally, but there was really no follow through, which is absolutely another good setup trade. Again, what's the market trying to do? Trying to go higher. Once it takes out the lows, these are great trades. In fact, that day it was, a break here of 50, let's say 5,600 down to 53.20. Not too bad. But again, I'm a swing trader. I hold. I know I think the majority is our day traders here. Are you guys exclusively? And I don't know if anybody's out there listening. Are anybody hold overnight? Any swing traders or intermediate term, longer term? Then I'll keep it. All right, Philly. I'll keep it shorter term. Yeah, just kind of hanging in there, not doing much. I'm going to watch to see if it kind of breaks down into this distribution. It's an interday, and again, small as a 5 minute. No, let's just watch to see how this thing goes. But it's hanging in there. I'm guessing NVIDIA again is pretty much towards the highs. Maybe a little bit of a pullback. Now the Dow's pulled back a little, or started to push a little bit. So you take a look at the equal weight, and again, you got to bring all this. You take a look at the equal, even though it's the value area is lower, it's still held yesterday's range. Maybe this is probably a. Let's see how fine we can get. Okay, here's a good example. Delphine, you were talking about. Here's the low from Wednesday. This is yesterday's low. So by definition, today's lows are weak. This is I get weak low, poor low, but this is a little bit suspect because we stopped, and again, this is for the equal weight S&Ps. So I don't know how much people trade off of this, but they stopped on a dime on yesterday's low. So by definition, Jim Dalton saying, and again, either poor or weak low, that this is weak, that this should be challenged once again, that this is all retail buying going up. But here we go, as we hit new highs on the S&P 500. So, but I think that was just a good example of a weak high and weak low. I don't think the vehicle really validates that example of it. I mean, S&P's hitting new highs. I'm guessing the E-minis are doing the same. Yeah, really not doing much. You kind of have, and once again, this is probably not the best example, but you kind of have this point of control here. Just to find it a little bit better here. Yeah, it's that whole area. If if this area holds, I mean, these are, again, the point of control wants that a little bit. Um, Continue to go higher. One of the other things is watching how development of the value area works. Um, this is, make this a little thicker just so you can see. This 30 minute. This again just kind of validates what's going on. Is just another illustration. Value areas continue to creep higher even today. As you can see, it's even the lows, both the lows and the highs are just drifting higher. That's what you want to see. So we're, as a trader, you start putting all this stuff together, you should be starting to get some sort of narrative in your head of, prices were down, demand start coming in, value areas higher than yesterday. We're still, markets are still kind of pushing higher, not dramatically, but as I had mentioned earlier, I think a lot of people are going to be somewhat sitting on the sidelines waiting for, tomorrow's speech for any kind of insight. I mean, the bond market's not moving. It's been kind of sideways. Really no movement today. So again, that's pretty much, it's really not a lot of movement. Here's what I haven't talked about. Cool, Bitcoin. Here, let me get this out of here real quick. But another thing is the good and bad is if you are an E-mini day trader, you focus on the E-minis. If the E-minis are having a very choppy, very slow day, it makes trading tough. But, and again, I'm just talking about from a swing trading standpoint or a little bit longer term, is you got Bitcoin has done very well. This is an ETF of Bitcoin. Let's go to Bitcoin. Here's an area, a little bit here for the put a do it the proper way is you put a distribution on this sideways movement, right? And if you put on the point of control, can pretty much stop prices here. Looking at it, but I had a trade in here. Once this broke, is you kind of value, or you've got a balance here. It comes down here. You got demand. demand, supply. So this was a pretty defined balance area. They found value in here, right? So prices were going back and forth. One of the more successful trades I had, and they don't come off that often, is when prices break above value. Let's put this in here just to give you an idea. Once you're looking at prices in this area, right, is prices tried to break and they were unsuccessful. These are just really good setup trades of, and again, what's the market trying to accomplish? It was trying to go higher, couldn't do it. Supply came in, pushed prices down. In this case, using this somewhat value area, they do go to the other extreme. And again, that little philosophy, the trading philosophy of, as I mentioned earlier, is, opening up prior to the previous day's value and it goes into it. It's the same philosophy as, value areas hold prices. Think of them as somewhat of a magnet. And it takes more effort to get them out of value than it is to keep them in value. And they tried and they failed. Kind of an indication that they don't have the energy to do it. Once they did that, and especially when they broke through on the downside, these are great trades. And I highlighted this box, and again, this is more not necessarily for day trading, but you could use exactly the same strategies day trading as I'm showing you on swing trading basis. So that's kind of why I'm showing you. You get these formations intraday. It's the same thing. It's the same philosophy. So you could use the same stuff. Is people don't use market profile correctly, but you've had this area of value broke above. Once it came down, I shouldn't say but you feel pretty comfortable that this area should hold, which it did. Kind of held in here, tried to rally, went back in, touched the lows. Now we rally it out of here. So these guys here are defending that price here, especially a break above here. If we get above this area, there's a very good chance that we're going to go up to the 91, into the 90,000, 93,000. Wouldn't be surprising at all if we start seeing, especially if it breaks above that, a testing of new highs. But I'm showing you this on the longer term, but the same philosophies are good intraday. Again, you take a look at these, and the first thing I did is here's a P formation, here's demand. It's starting to push higher. These things work great. Here's the intraday look at it. I mentioned that this area, the 70. Let me go back to it. I put a line originally at the 77.35. That's correct. It kind of got close. More so than I thought. What was the high today? 77.21. Oh, I'm sorry, 77.32. So we're within a few points of this area. Are they gunning for it? Let's see. And are they going to be successful? You want to definitely be buying the dips as of right now, more than anything else. Again, value area relationships. So watch this. Any kind of dip back on the 30-minute chart, which is more traditional. Yeah, we're just about there. Let's see if it's valid. I mean, they may just blow through it. But, you know, you get a line here. Some traders like, oh, I'm going to just put a short there, thinking that it's going to pull back. Valid trade. So we came within 2 ticks, close enough. All right. It's not an exact. But I put a profile. This is a little bit more traditional. Even it's a volume profile, but each bar. So this is us today. I think this is the regular session. Here's the first bar. You kind of just watch the value areas. You could just see a little bit more definitive is this area was tested, and we just been drifting higher. We had this little tiny pullback, but value areas continue to go higher. How does one obtain the value areas? Pretty much a lot. Most of them. Most software packages have it. I'm using TradingView right now. They have it. Pretty much almost every software program has it. See, we're touching that right now. Yeah, we just blew through it. So, hey, like I said, the market's going to do what the market's going to do. But that line was not an exact line. If you're really into day trading with profile, with market profile, and want it to be more fine, being a swing trader, I'm using volume profile versus TPOs, the traditional. There's really no empirical evidence which does better. The reason I'm using volume profile on TradingView is I do swing trading, and it's a little bit easier. It's a little bit easier to merge different days. But if you're very interested in it, there's the best one out there, the best trading platform out there for traditional market profile is Window Trader. Terry has done a fantastic job. It's the most detailed. It is the best software. Again, if you're day trading it, if I was a day trader, I would not. That's the only one I would use is Window Trader, WINDOTRADER. So I got a little bit of a pullback, but just. Yeah, if we get into, we just kind of look, is you take a look at the profile, everything is fine. You're starting to get a new distribution up here. If it gets down into the 729 area, prices start sucking it back down. Here's kind of your distribution, right? This is for intraday trading. This is the area to watch. Again, this is the first line that we may start pulling back. This seems to be a little bit more valid of what to watch. Now, it's been what, 5 points? Really nothing. And again, I pull back to a 5-minute chart just to get a little bit more definition. And again, this distribution is just everything up to here. Funny how these act as support and resistance lines, these low volume areas, which are kind of stalled there, coincidentally. But again, this is nothing more than a traditional pullback. That line seems to have held from August 19th, 18th and 19th, I think. Yeah. So all this, I don't want to say held the market, but just made it rest for a second. But in summarize, just taking a look at the action is again, just showing you this, I don't have it's very, early. It looks like this area held. So are we starting a new distribution higher? This is the main distribution. I think if we start breaking down into, the 428, maybe the 427 level, or the 727 level, that we may just rotate back and forth between that and 712. But this is, you got to buy the dip stay. And it looks like that's held. New push higher. That's like, the personality looks like they still haven't necessarily found any value. Like they want to try to push higher. So what's next? Put a profile from here. Here's that low volume area. You got a ways to go, but looks like it just wants to go higher. Buy the dips. But I'm running up to about 10 o'clock right then. So guys, again, thank you very much for the opportunity to talk. I hope I brought a little bit of value to your time. Be careful. We have wash talking about tomorrow. So keep that in mind. Again, everybody, thank you very much. Said I hope it was worth listening to. I had fun. But anyway, thank you very much.